SPACs have become an attractive method to take a company public. Lucid Motors will be completing its merger with Churchill Capital 4 soon. There's a lot of attention for this merger, but what should we really expect? What is there to know, and is this the right time to invest? Welcome back to NewVehicleMedia, the channel that has everything on EV stocks. Subscribing is free, and when you like this video, YouTube will be able to recommend similar videos to you. Comments are highly appreciated, and we will feature the best ones in our upcoming videos. Today, we'll be taking a deeper dive into our favorite, Lucid Motors and their upcoming SPAC deal. The merger is set to happen on July 23rd, and many are speculating what will happen to the stock levels. We have tried to analyze the situation and compare it to previous events. Is the company worth its current valuation, or is there too much hype? Let's find out in today's video. Analyst projections. Lucid Motors is a high potential EV manufacturer. They plan to have a dominant position within the industry with superior technology. Their initial foray into the luxury vehicle market will gradually expand into a larger market, starting with an SUV and a later on speculated lower priced car, either by producing one themselves or licensing out their tech to another brand. The company is also active in renewable energy storage. The merger with CCIV is expected to close on July 23rd. It has been announced back in February this year, and the current offer is $15 per share. This is expected to result in an IPO equity value of approximately $24 billion, which implies 1.6 billion shares outstanding post-merger. The completion of the IPO will result in proceeds of $4.4 billion to Lucid, which will be used to bring their flagship sedan, the Lucid Air, to market, and later on broaden their EV line up. We are a strong supporter of Lucid, and we believe they can grow their company to a global brand with continuous innovations. Our key beliefs in the company consist of 6 factors. First is the increased adoption of electric vehicles and its push from government intervention. The G7s have been pushing the sales of EV only to 2030, and the Biden administration is set to invest $174 billion to boost the market. Secondly is their branding. Lucid has spent enormous energy on selling more than just an EV. Their branding is super strong and well thought through. The company has multiple studios located at buzzing shopping streets. They work with a strong direct sales strategy that helps reduce inventory financing costs while offering more service for the customers. Third belief is in their vertically integrated business model. This strategy will support the company with flexibility in their research and development, increase cost efficiency through scaling production, and manage future demands such as expected models. The fourth lays in their highly skilled and experienced management team. There's a video dedicated to this topic on our channel, but in a nutshell, their leadership has background in senior roles at other luxury brands such as Tesla, Jaguar, and Audi. Our fifth belief is in Lucid's innovative technology. The company is leveraging years of innovation gained from their Formula E experiences. And last but not least, the company does more than just selling electric vehicles. Their ESS, short for Energy Storage System, is focused on providing commercial, residential, and industrial use power solutions. Nikola Motors comparison. As an investor, it has been impossible to miss this one. In September 2020, Nikola was labeled as an intricate fraud by Hindenburg Research, claiming that many of the company's products or claims were made without any type of evidence to support their legitimacy. The report claimed that Nikola had created a high level of deception to make big waves in the industry. The company later admitted that several statements were inaccurate and listed 9 occasions where Trevor Milton, their CEO at the time, openly misled investors. Amongst these lies is a claim from 2016 that their semi-truck was a fully functioning vehicle, and a 2020 fabrication that 5 vehicles were rolling off production. Not much after, the company admitted they had lied about the capabilities of the prototype that was shown to investors. Their CEO was relieved from his duties, a deal with General Motors was impacted, and the stakes were cut by 25%. Currently, the company is moving forward with a new CEO, Mark Russell. It's safe to say that Nikola has been fraudulent. They did not have an actual performing product and may have been followed by investors who blindly followed the hype and trusted the company's information. Too much hype. Sure, nobody can deny, Lucid and their upcoming merger has been all over the news and may have been marked as a hype merger. But that does not mean that a similar situation will occur with Nikola. Nikola was not having an actual product. They were purely and solely hyped. Some consider it to be luck, others consider it to be a fraud. But in comparison to Lucid, there's a large gap to identify. Lucid has real products. They have brought their products to the attention of the public on multiple occasions, and people have been able to feel and real life experience it. Lucid also has showrooms, or what they call studios. A place where they sell more than just a physical vehicle. They sell you a brand, an experience and a lifestyle. Lucid is also backed by a high-level leadership team with a strong combined experience in the automotive world. The financial backing of the Saudi Arabia Public Investment Fund is a cherry on top for most investors. Previous mergers. Each merger is an event on its own, and there is not a metric to be found between them. But it's interesting to compare the performance of previously happened SPAC deals. Just recently, the space exploration startup Astra went public with Holicity. The voting on this deal took place on June 30th, got approved, and the business combination closed immediately after. In the week of the voting, stock price ran leading towards the merger. On the voting day itself, stock prices dipped by 7%. But once the vote went through, the ticker got changed, prices saw a small gain. In the following days, prices went up close to 30%. Another interesting comparison is the Northern Star Acquisition Corp merger with BarkBox, a leading brand in the pet niche. This merger was closed on June 1st. In the run towards the merger closing, the stock price was seeing a small run-up up to 15 to 20%, which fell back a few days after the merger completion. Lucid's financial outlook. Lucid has yet to release any public filings to complete its financial records. Based on the confirmed 10,000 plus reservations of the Lucid Air, the company should sit on an anticipated sales of at least $800 million. The company is also in process of executing their global expansion plans, including studio openings in Europe and the Middle East in next year. This will complement their online sales platform, which is now open in 18 countries. Sources like Wallet Investor use an AI-based solution to forecast stock levels. Their projections state that the Lucid stock price is expected to be between $37 and $39 by the end of this year. They have also stated that with each year passing, Lucid will increase their production numbers and grow their operations, resulting in stock prices as high as $62 in 2022, $85 in 2023, and above $100 in 2024. Wallet Investor and their AI solution is clearly very bullish on Lucid, and with them many more sources, which also includes this channel. Conclusion. Lucid is getting ready for the merger and has gained interest of many investors. The company will strongly benefit from the merger as it will boost their production process, which will result in seeing actual vehicles on the road. Lucid is getting ready to become a serious competitor in the world of EVs. The company has a real leadership team, a real sales studios, and soon real cars on the road. The demand for EV is only growing, which will create the availability where new entrants like Lucid can benefit from. The company has advantages with their years of innovation that have resulted in strong technology and product offerings. We believe Lucid has everything it needs to excel in a rapid evolving industry if it continues to effectively take advantage of its vertically integrated business model, state-of-the-art battery technology, premium quality vehicles, and enhanced customer service, which will ultimately be reflected in the stock's long-term growth. Getting closer to the merger, there might be a stock run. Investors might jump on the hype, love the brand for a day, and completely vanish it soon after. But that doesn't have to impact Lucid's long-term potential. The company is here to stay and compete with established legacy car makers. $1 stated that the stock might go up or down a bit, but in the long run it will go up again. What are your thoughts leading up to the merger? Are you about to step out, or are you ready to invest more? What are your thoughts about Lucid in general? Will they be able to get their first vehicles on the road? Let us know your thoughts in the comments. Also, here's a quick reminder that subscribing is free and liking will boost your personal YouTube homepage with better content. Thanks for watching. Hope to see you on the next one.